Welcome to the In-Rem Podcast, where we discuss the law for real estate investors. Andy and Sean are both attorneys. Nothing said in this discussion should be considered legal advice. We're simply providing information and education. You should consult with an attorney in your state regarding any specific legal issue that you may have. Hey, good morning, everybody. Today, our topic is business diversification and structuring from an investor's perspective. I'm Andy Fowler, and I'm here with Sean St. Clair. If you're new to the show or if you're old to the show, either way, give us a like. We're on Facebook and YouTube. Subscribing to our channels helps us out and helps us provide you better and more content. With that, let's go to Sean. Give us our legal update for this week.
Yeah, so our legal update today is a time is of the essence clause in a contract. And what does that mean, and what's the significance of that? I'm sure a lot of our listeners have seen time is of the essence clauses in the different contracts that they, are utilizing, executing. It's like, well, what does that mean? Why is that in there? And a time is of the essence clause is basically making it so that a non-material breach as to meeting a deadline within the contract is a material breach. And what I mean by that is, if, let's say, and I've talked about this before, in the assignments that I prepare, I have basically a drop dead date for closing the transaction, right? So the assignee, the end buyer, has to perform by the date set forth in the assignment, make sure that they can close escrow on that date. They don't have the benefit of any cure notice in the contract, et cetera. They have to close. Well, I can have that in that contract all I want, but if I don't have a time is of the essence clause, that provision may be of no value. It may be a non-material breach if, let's say, it says, well, close on a Thursday, and the assignee is unable to, but Friday morning, right when escrow opens, they deliver the funds and they're ready to close. And they're like, I'm ready to close. Where are your damages? How have you been harmed? There is no breach. The purchase contract is still alive because maybe the seller had a cure notice, which provided additional time for performance. And so the assignee is like, hey, I'm ready to close. And they would probably be right. That would be a non-material breach and would not allow the assignor to cancel the assignment and terminate the assignment and basically take back over the rights under the purchase contract. But if you have a time is of the essence clause, that turns that non-material breach into a material breach. So it basically says time is important. It means something in this contract. And so when we have dates or deadlines, they must be adhered to. And if they're not, that's a material breach. So that's what a time is of the essence clause is, and why it's important to be within any contract where you do have deadlines, because you want to make sure that those deadlines and the failure to meet those deadlines are material and not just kind of almost like a recommendation or insignificant, as long as they, perform closely to those deadlines so that there's no damage or harm to anybody. But if you have time is of the essence, then those deadlines are material, they're important, and they must be strictly adhered to.
So what you're saying is all those provisions at the end of a contract that we all skip over and are in every provision, they actually matter, right?
They matter. Yeah. And so, you have to be careful the different things that you put in there. So time is of the essence is an important clause and something that should not be skipped over when you have a contract that has deadlines. Now, I've prepared contracts that don't have deadlines where I've taken out the time is of the essence because I'm like, well, there's no deadline here. A blanket assignment, for example, with no deadline, where I'm just assigning the contract and there's no performance on the assignee's end. They don't have to close within a specific time. You're actually, assigning the full bundle of rights under the contract to the assignee, and there's no performance, then, I won't have a time is of the essence. But if I have an assignment where we're pulling back certain rights, especially, as to closing deadlines and things like that, and saying you have to close in order for this to be valid and for you to be able to purchase the property, then in that case, we're going to want a time is of the essence clause.
Very interesting. All right. Thank you for that legal update. A reminder and an announcement. INREM, the podcast, Sean and I will be live on site and live streaming from the Buy and Hold meetup on September 27th, starting at 4:00 p.m. Folks, that is next week. It's already next week. If you can be there live, we'd love to see you. If you can't, you'll be able to watch it and watch the podcast live as we stream prior to the event. Sean, why don't you tell us first, the location is going to be at the Scottsdale Area Association of Realtors, but give us an idea who can come to the event.
Yeah, and if you haven't been there, the Scottsdale Area Association of Realtors is a great venue, plenty of space, and the hosts provide complimentary food and drinks, and it's just a really good event and high quality event to attend. But anybody can attend. That's the great thing about it. You just have to RSVP. Normally, who's in attendance are investors, particularly investors that are looking for buy and hold properties or exploring that. But we also have lenders. There's hard money lenders there. There's title companies there. There's attorneys. I attend regularly. There's other attorneys that attend this event regularly. But anybody that's really interested in real estate, there's real estate agents that attend regularly because, of course, they're wanting to work with the different investors and helping them find properties that they can purchase for a long-term hold. So it's just a great event with a lot of real estate investors and other professionals there in attendance, and it's free of charge. So yeah, come on out.
Now it's an awesome marketing opportunity, like you said, an opportunity to go meet other real estate investors, but it also provides content too. And this month you're the speaker, right?
Yeah. So I've been given the opportunity to speak at the event this month. My topic's going to be creative financing and talking about the different legal aspects of creative financing, going over some forms that you're going to want to utilize and have executed as part of the creative financing process, and just basically the legal ins and outs of creative finance.
So it will be starting at 4:00. Give our listeners an idea about what the heck we're going to be doing there.
Yeah. So at 4:00, the event starts, and that's really just open networking. So from 4 to 5:15, right in that time frame, they have open networking. And so during that, we're going to be set up and we're going to basically be doing interviews. So we'll be interviewing the hosts of the event. We're going to be interviewing some investors that are there. And then the last half an hour, 15 minutes or so of the open networking, we're going to just open it up that if anybody has some questions from a legal perspective, we're going to provide some education and information in response to that. So, people can choose a topic and say, hey, talk to us about novations, the legal ins and outs of novations. And we can talk about that and go over that and share that. So if you want to show up and have some questions for us, on the legal side of investing, we'll be there. We'll be answering them the last, half an hour or so of the open networking component. And then once the presentation starts, we're going to live stream that as well. So if anybody's unable to attend in person, they can catch the creative finance presentation live through various sources. So the INREM, Facebook, I have a Facebook group called Real Estate Investor Legal. We'll be live streaming through that. Our personal Facebook pages will be live streaming that way. And even the buy and hold group or hosts have a page, and they'll be live streaming through that. So there'll be plenty of opportunity to watch it live, but I think it'll also be fun to come on down and basically, have the opportunity to participate in the event in person as well.
All right, folks, you heard it. September 27th, starting at 4:00 p.m., Scottsdale Area Association of Realtors. If you need more information, check out the INREM Facebook page. We've provided details about it there. With that, we're going to go into our topic for today. Today, we're talking about business diversification and structuring, the importance and the process of business diversification. With us today as a guest, we have Mark Monroe. Mark is a real estate investor, developer, and consultant. Mark, thanks so much for joining us.
Hey, thank you so much for having me. I really appreciate it.
Yeah, we really appreciate you being here. Mark, give us and our listeners, tell us about how you first became involved in real estate.
Oh, wow. Going to show my age here a little bit. I actually started back in 1995. I got into real estate banking up in the Washington, D.C. area. Took a course there to learn more about loan origination. The instructor hired me, worked with him for about a year and a half, met a couple partners. We ended up blowing that up to about 107 loan officers in the Washington, D.C. metropolitan area. So that was the beginning of my career, and just over time I just kind of learned different techniques and followed different gurus, if you will. Back in the day, Wendy Patton, Ron LeGrand, just kind of learned the ins and outs of real estate investing, especially the creative stuff many years ago.
Yeah, so give us an idea about how you transitioned and became involved in the investing side of it, the wholesaling, the creative finance, kind of that bag of investment focus.
Sure. Well, I think a lot has to do with the market condition, because there's different strategies within the market condition. Like, we've just been on fire for the last, 10 years. So wholesaling and the fix and flips have been on fire. Now that the market is starting to shift, then you start to pull out your tool belt and start looking at different strategies, like the creative side's coming in, where sellers can't move the properties so much. The subject to the existing mortgages, seller financing, lease option, contracts for deeds. So when the market kind of pulls back, that's how you kind of learn the different techniques over the years, and just experience and constantly growing yourself through different techniques and different avenues. Real estate's changed over the years through many different ways, through regulations, through different strategies. Sure. So that's kind of my technique, how I got into real estate.
Sure, and I know that a lot of this is eventually heading towards this broader subject of diversification, but you've also have experience in development work. What got you into development
Um,
work? Is that just an idea
yes.
to broaden?
Yeah, so it's always been my passion. Just, you know, quite frankly, it's just learning the creative real estate structure of working with sellers and JVing with sellers. And that's the beauty about real estate, is because, other industries, like, your competition, you're kind of afraid of the competition. Like, oh my God, I don't want to tell them anything. But in real estate, you can kind of work with your competition and collaborate and kind of take down deals together and do larger deals. So just kind of learn, my seller financing side, take that into the land development side, and kind of learn that process of where you can kind of lock up land without even have to come out of pocket with any capital, because you're bringing the land owners into the deal and you're helping them. So they're actually making more money on it as well, because you're creating more value within that land of creating a new product. It's a value add product, if you will.
Now, I know you and I understand that you offer consulting services. Tell us a little bit about that.
Sure. I really work with a lot of new people that are coming into real estate. I don't really charge like a course. I usually will work with them in joint venture, JV together on them. And God, I probably have right now, um, I would call bird dogs or JV partners, probably around 5 to 600 that have built up over the network over the years. Some of them are very consistent, and some of them are working a 9 to 5 and kind of, just wanting to add more to the portfolio. So just kind of working with people, giving them the basics, like, hey, here, this is what you need to do. Go out, find a deal, teach them how to find a deal, how to network. And, you guys mentioned what you guys are doing your networking event. I cannot highly recommend, if you're getting new into real estate or if you've been in real estate, networking is the key, absolutely the key to grow your business. I mean, networking is just how you find the deals, how you find capital, learn different techniques. There's so many different ways to make money in real estate. You just kind of start talking to people. Oh, that's a great idea. I didn't know that. Or you just kind of network and kind of grow from there. And we kind of all help each other out. And then find somebody, if you're new, to your same caliber, so you guys can help each other and kind of grow. I call it like accountability partner. And then you try to find somebody that has experience, that's your mentor, so you guys can kind of grow together.
Now, Mark, I know you're involved also in both the podcast space, But you're also involved in writing and working on a book. Why don't you tell us about your podcast and the book you're working on?
Sure, sure. I appreciate it. So the podcast is called Real Estate Power Play. And what happened was there was, again, the networking event. I was in a mastermind group probably a few years ago, and I met some great people that, everybody's caliber. We have Gabe down in Houston, Texas. We have Marty up in Rochester. And then we have Ronnie that's up in the Michigan area. So we all kind of come together. We all kind of have our own strengths. So we kind of go on there and we kind of rotate, give value to the listeners, helping them out. And then we started bringing in some really great guests. Like we have Lou Brown coming in. We're going to get Sean on there too to kind of help out to that aspect of it. So it's really just to kind of create value, provide resources for people to kind of get started in real estate again. And then a lot of those people end up kind of bringing deals to us, and we all kind of work together on the deals. And then the book, so this is the first time I'm plugging the book. The book is called Creative Real Estate Investing. It should be out in about 2 to 3 weeks on Amazon. And I just go into different details of different strategies of, what creative selling financing, like lease options, also known as rent to own, contracts for deeds or land contracts, owner financing, subject to, and I touch base on the wholesaling aspect of it and the Bird method. So just kind of going into it, touching bases on it, where to find the properties, educating people, and then providing resources where to go. Like if certain people have courses, like if you want to know wholesaling, like Sean Terry out in your neck of the woods, he's a great resource to find. And so that's kind of why I brought the book out and kind of help people. And that book would have, if I had that book when I first started out, it would have opened my eyes up so much.
So let's talk about diversification. And I think your introduction was a good lead up into that, because if you're just now joining us, we just went through a number of things that Mark's involved with. Mark, you're involved in developing, consulting, real estate investing. So the first question really when it comes to diversification, why so many hats? Why is that important to you? And have you found that to be important?
Just over the years, being a business owner, the economics, things change. We have, there's years that our economy is doing really well. Everybody's, 401ks and stocks and IRAs are all doing really well. And then you have economic conditions when things pull back. So you have to be able to diversify and be able to adjust quickly. So it's kind of, you want to have multiple ways of stream of income coming in. You can't just rely on one, especially if you're self-employed as a small business owner. A lot of small business owners tend to struggle, especially if they just stick on one path and it's been great for many years, but then the market shifts, for whatever environment. It could be a political environment, regulations, whatever it may be. You have to be able to diversify, otherwise you're going to get caught. And quite frankly, that's how I learned it, through experience. When I was younger, I kind of got stuck. Regulations changed industries and kind of like, oh no, that hurt my business. So that's kind of why you end up learning how to diversify. You just be able to gotta, shift and adapt quickly as possible in business.
Now, you were largely talking about diversification, being able to adapt to economic market conditions, which of course is important, because some of these real estate investments work well in some economies, and then they don't work as well in others, and having that ability to be flexible. How important is diversification to you within like particular localities? Let's say uh, investing in different states or different cities, or different things on the ground, whether we're in a good market or a bad market. Or do you preach and kind of practice a diversification within that as well?
I try to. However, I'm going through a situation now with a property up in, a state that is not very landlord friendly. I purchased a property up there, and then I turned around and sold it on a lease option. And it's just they defaulted, and it's just very challenging to go through that process. It's taken almost 10 months to get them out. So you're still constantly learning, like you said, the different cities and different states and different markets. Over the years, I do pull back on certain markets that I won't do business in. Or if I'm going to do business in it, like, what's my risk factor? How long, what kind of risk and what kind of capital do we have at risk, and if it does happen, what's the end result and how long will the process take? So that's kind of really where I look at it. And you have to, and it's challenging because a lot of these states are always kind of changing the regulations, especially for real estate investors on these particular strategies. So you need to make sure that you're on top of it in understanding, because, like wholesaling, I think wholesaling now in certain states like Illinois and then Philadelphia just passed something. So you have to make sure that you understand that. And then if you can't do it because of the regulations, that's where you can come up with a new strategy or a workaround to try to understand it to stay within regulations, but also the economic conditions within those areas. I mean, there's some markets now, right now is a prime example. There's markets right now that the housing pricings are pulling back. And then there's some markets like Florida is still increasing. So it's just, you have to understand the market.
Mark, thanks again for being on with us. We really appreciate it.
I appreciate it, Sean.
So, getting into the different strategies for different economies, you mentioned, even throughout the country right now, we're seeing, some depreciation as well as some states that are still holding steady with some appreciation. So, and you've mentioned this a little bit before, but let's kind of dive into it. What strategies work in different economies? What strategies work when you have appreciation? What strategies work when you have maybe just a plateau? Nothing's going up, nothing's going down. And then what strategies work when you have depreciation?
Right. I actually like the strategies when the market is starting to pull, when it pulls back or flat. I like it when a property's been sitting on the market for 3, 4, 5 months. So the sellers, are a little bit, they're definitely a lot more motivated to be able to sell those. So that's when you can come in with a creative solution and structure a seller financing type of deal, no matter what vehicle you take it through, if it's a lease option, seller financing, contract for deed, a land contract, depending on your state. Those are the strategies that I really like, because you can actually, it's a win because you can help the seller and then you can also help the buyer. Coming from the real estate banking world, putting people into a property that they eventually become home ownership through a lease option program, I think that's incredible. But you want to make sure, and this is where a lot of investors really don't do well. You got to make sure when you put somebody into one of those rent to own programs or houses that you make sure you give them enough time. A lot of these guys don't put people into the property where they're not having enough time so they can get their credit in line, so they have enough savings and it's not structured the right way. A lot of these guys will say, oh, I'm only going to do it for 12 months to 2 years. Well, especially in this economy, if you're selling that property at today's value and the market's pulling back, you need to make sure that you're giving enough time for that property to come back in value. So right now, if I'm doing a sandwich lease option, if you will, if you're just getting new into real estate, a sandwich lease option is probably one of the easiest and low capital entry point to kind of get into it. So what you're doing is you're taking a property from a seller that cannot sell it and they're getting ready to rent it. So you can come in and offer your services, say, hey, I'll buy this property. I'll take care of, the maintenance repairs up to whatever dollar amount and give them more of today's value, and then turn around and find a tenant buyer, underwrite them, make sure they're going to qualify and kind of stay in the middle. So you make money through the process, what's called, monthly cash flow, get a little money up front, and then you get the money in the rear. So during the down economy, those work really well. Now, in an appreciation economy, that's where, the fix and flips come in. That's where the development comes in. I was, the land development space right now is, they pull back dramatically. A lot of the national builders, they're stopping building. They're just finishing out their supply of inventory for a little while, depending on the market that they're in. But, some areas like Carolinas, Texas, they're still growing, but other areas are pulling back. So, you have to kind of understand who your end buyer is. That's really what it comes down to, who your end buyer is and how fast you can move your product of whatever that you're doing. Who's your buyer? If you're doing wholesaling, if it's a fix and flip in a market that's slowed down, where's your fix and flip buyers? You have to offer a deeper discount for them to come into that deal, or, who's your buyer if the product again is your rent to own, or your seller financing buyers, those. So you just kind of have to understand the market condition and kind of understand that particular strategy.
Well, let's talk a minute about the creative strategies. So you've mentioned a few. So you mentioned, the lease option, the contract for deed, the seller carry. when you go to approach a seller and you realize, hey, this property's been on the market for 90 days, it's not moving, this seller's probably motivated. What are you thinking when you go in as far as, hey, I'm going to offer this strategy? What makes you decide of those, say, 3 strategies, which one that you're inclined to offer the seller, and why do you come up with that particular strategy?
Sure. Great question. Really listening to the seller, asking the questions, what's their objective, what are they trying to accomplish? Um, that's really what it determine on, how motivated are they? Are they behind in a mortgage? Are they in a financial situation? Or did they buy another property and they need to move? Or are they just downsizing? Or were they a landlord that's a tired landlord that likes that passive income? So you kind of listen to the seller, and that's what you kind of determine what your strategy is. Especially the tired landlords. If you're getting into real estate, that's probably one. Even in all economies, that's probably a great one, because the landlords love that passive income, and they love selling it through seller financing, because they get nailed with capital gains as well. So that's a great strategy as well. Sure. Yeah, that's kind of you just listen to the sellers.
Well, yeah, and the lease option to a tired landlord, or even seller carryback to tired landlord, they really like that, because now they're receiving the cash flow, but they're not getting those midnight phone calls, right? They're not having to deal with the property. It's like someone else's problem and the money's still coming in. Maybe the same or a little bit less than what they were previously receiving, but they don't have the headache. They can travel now. They don't have to be next to the property. They can, they're free to go and come, and the money just shows up in their bank, every month. And
Yeah,
they like that. So.
Yeah, it really is, and it may not be just that. It could be. We just purchased one late August. Actually, we closed August 30th, and it's sad. It was 11 units. We bought it with 0 down. We closed on August 30th. We ended up getting a check back at closing for like $9,700 because of security in last month, and then 2 days later, we ended up collecting September 1st's payment. So we got paid to take that property, if you will. But in that situation, what happened was the father was a landlord. The husband or father, he acquired a bunch of property through many years. He passed away probably 5-8 years ago, and then the daughter took it over. She was like 28, and she got into an accident and she passed. So the mother couldn't handle any of it, but she liked that passive income. So we just kind of found out what she wanted, what she needed to live off, and then we just kind of went in there and took it over. The property does need some work, but those opportunities are there. So you just kind of have to listen, and that came from, again, networking and a referral. That's kind of how those deals come in, just kind of doing a lot of referrals.
So what kind of market indicators are you generally looking at, or using to determine the different business strategy or investment strategy that you're going to pursue at any particular time?
Usually, you just kind of go on to like your Zillow, your realtor.com, and you can kind of look at that particular market and see what's going on, seeing how long homes are sitting on the market for. That really is probably the main dictator. And then actually picking up the phone, talking to some local realtors, and then who else is in that particular market, just kind of educating yourself, picking up the phone, just talking to people in other markets. So, and again, a lot of these come through other investors, referrals. So I don't know what the market. Well, I know most of what markets are doing, but like, say for example, if I'm going into, I don't know, Utah, Salt Lake right now, I haven't done a deal in that market for a little while, so I'd have to go in there and do a little research and see what that market's been doing. I know it was hot, but I don't know how it tapered off. That's just a market, an example that I don't really do business in right now, but I know most of the East Coast. I know all those markets pretty well. The West Coast markets, a little bit here and there, but most of my stuff is up and down the East Coast.
Mark, I want to ask you a question, and before I ask it, I'm just going to say I realize that we now have the benefit of hindsight, and when we're starting a business or starting to do what we do now, we don't have that benefit, and we're feeling it out. We're failing forward, right? We're finding out what works, and our education is basically our failures usually, and hopefully those turn into big successes, and a lot of times they do if you just stick with it. So, yeah, and I know you alluded to some of this kind of in wanting to be diversified, so that you have the ability to be agile and move with the economy, move with the locale, so on and so forth. I want to talk about entity structure. Given given what you know, where you've been, I'm sure you've probably set your business up a variety of different times where you would have done that differently. But is there a particular entity structure, business structure that you use that you find is favorable kind of to your approach to being diversified and being able to move with the markets?
Sure, sure. My attorney's going to tell me I'm nuts talking about this right now, but anyways, yeah. So it all depends on, like you said, the deal itself. For example, if we're doing a development deal, we created an LLC just for that particular development deal. If you're going to, and that's where I'd recommend people to kind of reach out to your attorney or even you guys for the legal advice on something on the structure. But if you're going to be doing the short-term games, versus also your holdings and how many properties you want in a certain LLC, because God forbid if you accidentally backed up and you run over a child by accident, they could put a lien against some of your LLCs. So you want to make sure you're diversified in your protection, your assets, and then make sure you have good insurance. But it does take some time to learn that. A lot of real estate investors, especially new, don't understand the proper structure in the LLCs, and even some of the CPAs and their accountants don't even understand some of the real estate structures. Sometimes I've seen that. So you want to make sure that you talk to people that's been in business for quite some time, not just within a few years, but a good 10 years in understanding. But again, regulations can change that. With corporate taxes gone up, you have to look at that. And but usually, most of them are LLCs and some are kind of classified as a C structure. So everyone's kind of different type of situation.
I know that this can change, and I think it's probably fair to say that your structure might itself be diversified depending on what kind of market or what you're getting in, whether it's developing, let's say, versus a quick fix and flip or this or that. Are there particular states that you prefer to utilize in forming companies, or do you just keep it simple with where you're at? I know that might get a little more complex as you broaden your reach out into other locales.
Sure. Yeah, so I usually use the Wyoming as the main for like holding a lot of companies. But then you also, if you're holding a rental, you need to make sure that you have an LLC within that state that you're holding that rental in, because if you have to go through the eviction process, some states won't recognize that LLC. They'll recognize as a foreign LLC. So, but then there's some states you can just hire a property management company and then they can handle that for you as well. So it's case by case, depending on the state. So on that, but back to what you said about learning, failure. If you're not failing, you're not learning. That's really, and I've always said that you have to fail to learn. If you're not failing, you're never going to grow. And you guys, that's good that you kind of said that, Andy.
So I do want to touch, because what you said about forming an LLC in the particular state where you're holding real estate is huge. Not only holding real estate, but the state that you're entering into contracts to purchase real estate, even if you're going to, be wholesaling. And the reason is, just to kind of expound upon that so our listeners understand. So, Mark, you mentioned you form in Wyoming, and that means I know, and I'm sure that Wyoming's an anonymity state, which means that if somebody were to search the name of your LLC in Wyoming, they would just see the name of the LLC and the attorney or document preparer that assisted with the formation, and that's it. That's all they would see. They would not see your name. If you have a trust, they wouldn't see your trust. They wouldn't see anything. And that's it. They just see the name of the LLC. They don't know who owns it. They don't know who manages it. They don't know anything. Well, let's say then you come over to Arizona and you're like, great, I have a Wyoming LLC with anonymity. And this is awesome. I'm going to start, buying real estate. I'm going to start entering into contracts for real estate. And then all of a sudden you realize you have a tenant in that investment property who decides that they don't have to leave. They don't have to pay, nor do they have to leave. And you're like, oh, now I need to access the court system. Well, in Arizona, the law is you cannot access Arizona's court system unless you have a domesticated entity, either an Arizona LLC or a foreign LLC that's been domesticated here in Arizona. So now you need to go to court utilizing that Wyoming LLC that owns that real estate and who's entered into the lease with the tenant. And before you do, you need to march on down to our corporation commission and you need to domesticate. Well, Arizona is not an anonymity state. And so what is Arizona going to require to domesticate? They're going to require the names of the members and managers of that foreign entity. So now all of a sudden, the anonymity that you receive through forming with Wyoming is out the door because you're going to have to list everything in Arizona. And so to avoid that from happening, our clients generally do what you just stated, which is they're going to form an Arizona LLC with the Wyoming LLC being the member. And then that Arizona LLC will own the property or will enter into the purchase contract. We've had that before where you enter into the purchase contract with the Wyoming LLC and the seller wants to back out. Now you have to go to court to enforce the contract through specific performance. And this is the same thing. You have to go and domesticate, in order to access our courts. So that is such a key point as far as, the diversification of your assets, not assets, but your entities, is to make sure that if your goal, and look, anonymity is not asset protection, and I don't want anyone to think that it is, but there are important features of anonymity for asset protection purposes, for deterrent reasons. But you want to be able to basically go in and access the court systems in every state that you're working without having to disclose the information on the entity that you were trying to keep private. So I'm glad you brought that up. That's so important.
It can add up. Let me tell you,
Yeah.
It can add up real quick with if you have properties throughout in many different states. And in some states like Florida, I even take it a step further. I'll put the property into a trust with the Florida LLC as the beneficiary. And then that Florida LLC is owned by the Wyoming LLC. So, you can kind of create, and then you can technically have a trust owning that particular one. So there's a lot of different ways but you also got to make sure that you're in compliance, because you can easily peel back the corporate veil if you're not smart about it and, commingling funds. So you just got to make sure that and I would recommend definitely talking to an attorney to make sure that you have the proper structure and understand your states, the state regulations on stuff to that nature.
Yeah. Very good.
Good stuff.
Yeah, Mark, following kind of the same line of thinking, I want to talk about tax strategies, and I think the theme of this, or the lesson of some of this, might be have a good group of professionals you're working with, because if you're diversified, we know the law itself has a diversity of ways to go and a way to protect yourself, and not every deal is the same. Not every deal is legally going to be treated the same, and how you do things. The same is certainly true with the IRS tax code. Anybody only needs to see a tax law book, and it can weigh down whatever you want with the size of it. So there's a lot of different ways to go. How important has it been to your business to work with professionals to ensure that you're able to follow whatever legal and tax compliance that you need to be to fit within whatever model you're doing in the given economy?
Yeah, just don't go cheap. Whoever your accountant or CPA, don't take shortcuts. You need somebody that really knows what they're doing. Sure, they may be a little pricey, but they'll save you a lot more in the long run. You just want to make sure you're in compliance, making sure your I's and T's are crossed, and just make sure you're doing everything on the up and up. That's the easiest way, just so you can sleep at night. It's critical, and it takes a while. Like I said earlier, a lot of these CPAs and accountants don't even understand the proper structures on that. So just make sure that interview who you're doing, that's going to be doing your books or your taxes, if you will. and make sure that they're on top of it, because tax code's constantly changing. It seems like every time there's a new administration that comes in, they're always changing some type of tax laws in there. So you have to make sure, and especially it affects us as real estate investors. It's been favored us for quite some time, and the good thing is that doesn't matter which party's in it, they both they're all in real estate, so they're always making it come across like, oh my God, we're going to do something, the big bad landlords and real estate guys, but in fact they end up not closing it completely. They leave the backdoor loopholes for tax purposes, even for everybody.
We've had this conversation with other real estate investors and attorneys, but this idea that there has been some frustration with real estate investors out there in finding professionals that really understand the nuances of what the investor's doing, what their niche is. And have you found that to be the case, to try to like really locate the lawyer that really or CPA that really gets it, what I'm doing, and can help me
It,
save?
it, it's it's extremely frustrating. And then if you do find the one, it just to be able to have a phone call with them, it'll take 2 weeks just to get them on the phone. It really, really is challenging. You just got to be patient, and just make sure that they're in your best interest of and just talk to other people again in networking. Just doing a lot of your networking and talking to people and just saying, hey, how's your CPA, who you're doing. A lot of times these guys, most of them will refer CPAs out, but I know like a lot of good contractors, a lot of people will kind of keep that to their chest and don't tell people who they're using. But it's just, you have to go through a lot. I went through quite a few over the years of just trying to find the right one. The one I'm with now, he seems to be good, but I'm still always looking for somebody that's even better, that's like top notch.
What about business contracts? So you've gone through, no doubt, many of them. Have you found a set grouping or certain documents that, man, I've got to get this one honed in, or I've got a good one and I'm just using it in a lot of the deals that I'm doing? Are there kind of a core set you would recommend?
Oh God, the contracts are always a moving target, always constantly adjusting in different language based off of, especially the states. Certain language in different states. And again, it goes back to your particular strategy. Every strategy has its own contract, and then you also have to understand your exit strategy within that contract. I just highly recommend spending some money on an attorney to make sure your contracts are good so you can sleep, because yes, it may cost you a little bit up front, but it'll save you a lot more headaches in the long run. And that's exactly what I'm going through one right now. I went with a contract up in Massachusetts that wasn't reviewed by a Massachusetts attorney, and I went and used it. And now, because of the language in that contract, it's totally different law within Mass, and it's probably stalling me about 4 to 5 months of it because of the language in that contract.
Wow.
Yep, you live and learn.
Yep. It's Real Estate Investor University 101. The lessons never stop, do they? But it makes us better. So let's talk about, and you've talked about this a little bit already, and so I don't want to beat a dead horse, but I think it's worth delving into. But having a diversification and learning knowledge, referral partners, people that you market with. Uh, you've mentioned it's important to market and to know professionals within the industry. I can imagine it would be very professional or very important to have professionals just in doing and in knowing individuals in different areas, especially when you're doing due diligence and entering a new market. But can you give us an examples where that's where marketing and expanding kind of your reach, your network has helped you make deals, find deals, stay away from bad deals?
Yeah, marketing is the key. Just networking yourself and marketing yourself is kind of, you can't grow. I feel you can't grow. You just got to step outside if you got to be outside your comfort zone and just get out there and just network and just kind of always marketing, going to different events, not even besides real estate, just stepping outside of doing different events. Like an example, a great way to raise capital is there was a cardiac convention that was out in Las Vegas. So it was a large national conference, and I just flew out there, just found out which hotel they're staying at, and just sat at the lobby bar at the hotel and just started networking with everybody. So it's always constantly just doing different marketing That's constantly growing your business. That's just one example, but there's many other examples.
Mark, are there specific events that you try to attend every year? And I know there's large national events almost monthly for investors, but is there a couple of events who, maybe someone listening may not be aware of, but you think, hey, fly out to this event. It's well worth it. Are there any that you try to hit every year?
Yeah, the best one is I like to rotate. I always like to rotate and go to a different event in a different um, vertical, if you will, like if it's a multifamily or land development or wholesaling or fix and flip, just to kind of get out there and network and kind of see different, because everybody has something different. But I would say Joe Ferris's best ever multifamily conference is probably one of the, I mean, really, really heavy hitters of the industry. The other one I really like is Real Estate Influencers. I think they're having one in 2 weeks in Tampa. That one's a really good one because they're, all the educators of the real estate industry, just kind of networking and kind of seeing what they're doing. But what I like to do is I like to diversify. I'll go to one conference um, and meet everybody and network, and then go to the following another conference that I haven't been to yet, just to kind of keep broadening my network, if you will.
Now, I know there's a number of different groups out there, in particular, online groups that you can join, that have content and people asking questions, people working, assisting each other. Are there some, whether it's Facebook, LinkedIn, Instagram, whatever the case may be, are there some, particular groups where you're like, hey, if you're getting into this to real estate investing, or you've been doing it a little while, but you're not aware of these groups, here's what I recommend, go on Facebook, ask to join, this particular group, or LinkedIn or Instagram, and try to get in and learn by kind of monitoring what's going on in those groups.
Yeah, absolutely. I mean, that's kind of really another great way of growing a network. I mean, actually, that's how Sean, you and I met through one of the groups.
Mhm.
Um, I even got my own group called Creative Real Estate Investing, and then I have another one. What is it? The Seller Financing Homes as well, so people can go in there and network that way. Um, but yeah, just going to, like, Pace's group is a really good one. I think he's up there. Jonathan Rexford out of Florida. I don't remember the name of his group. Subject to wholesaling. You just go into the groups that have a large network of people, and just kind of go in there and just network within people in those groups. But again, it can be time consuming, but those groups are really good. Facebook groups are the main groups. But then I also will go over to LinkedIn, and LinkedIn is a great area to find investors, if you will, that have that's good for passive income, physicians, business owners. So I use both groups to kind of network. I use one group for networking to find deals, and then I use another group for bringing investors and kind of bringing them into the different real estate transactions.
What about mentorships? I know you do some consulting, and you have some investors that you work with, primarily new investors that you're happy to JV or joint venture with and walk them through a transaction and that type of thing. And there's a lot of, there's, I don't know, there's hundreds of mentorships out there, but are there any mentorships where you've either participated in, or you're aware of, that you might recommend to, to help someone kind of diversify and learn, different areas of real estate investing?
It really depends on what you're trying to accomplish. There's so many good ones out there. Like, you have Joe McCall for lease options. You have Sean Terry, for wholesaling. You have Pace Morbly for, subject to. A lot of those guys have great courses. Um, you know, I'm a big believer of like working with somebody and coaching through. But if you're a type of person that is not disciplined, then I recommend paying for a course, because you feel like, all right, I spent a couple $1,000s, I got to get my money worth out of it, versus try to find somebody to kind of team up with. And I really like masterminds, like getting together with people of your caliber, or quite frankly, that knows more than I do. I kind of sometimes I like to be the dumbest person in the room, because I want to learn from them. So especially, in the land development space in the last couple of years, that's kind of where I've been really putting my focus on and kind of learning, because there's so many moving parts in the land development space.
Mark, I'm curious, when you're looking to enter a new area or a new market, do you try to find, or do you kind of on the front end of that decision start to develop marketing relationships with figures in those areas?
Yeah, usually what a deal will come in from a referral or investor, I'll look at it on surface and see if it makes sense in the numbers, and then from there, then I'll start going into the market and kind of looking at, I have a whole stream. I have VAs that out of the Philippines that are phenomenal. I mean, they know how to underwrite deals for me. They know how to look at the job growth. They know how to look at the what the market's doing. So I teach them and I've done videos so they can kind of go in there, and when a deal comes in, they'll just get all that information, pile it together for me, and then it makes it easy for me to quickly underwrite a file. And then at that point, I'll start reaching out to realtors and engineers and title companies in those areas, and even attorneys, and just kind of find out what's going on in that particular market. It depends on what the deal is. If it's just a residential deal, no, I won't go that extreme, but I will maybe talk to some realtors. And with today's resources and tools, you can just jump online and within 2 minutes you can kind of get an idea what the market's doing.
But even that process, I imagine, opens up new relationships and
Oh,
as it probably exposed you to multiple opportunities in an area that you couldn't even have planned for.
oh, 100%. Yep. 100%. I mean, it's just once you get in there and you start networking, you'll get more and more deals. I have so many land deals coming in. I'm probably about 3 weeks backed up of just trying to look at those deals and underwrite the deals. So I just can't get to them all because they're all just keep coming in, because once you go into a market, they start knowing, and then more deals keep coming in. So it's just very hard because there could be an amazing deal sitting there. So it's hard to kind of get through all that.
It really sounds like your approach to marketing is diversified, in that be open for the opportunity, be open to meet as people and expand your reach as much as possible.
100%. Couldn't agree more.
Very interesting. Well, Mark, we really appreciate your time and being with us. Tell our listeners how can they connect with you? What's the best way to
Sure.
get in touch with you?
Yeah. So you can really find out real estate power play. If you look up at any podcast or YouTube, you can kind of find my bio link there with all my Facebook profiles and stuff, or all my social media. But you can Google Mark Monroe Boca Raton over on LinkedIn, Creative Real Estate Investing on Facebook. So yeah, those are probably the best ways of just reaching out. Just Google myself.
And we've got a new book coming out. What was the title of your new book?
Creative Real Estate Investing. It should be out on Amazon in about 2 to 3 weeks. I appreciate it.
Creative Real Estate Investing. Mark, we really appreciate your time. Thanks so much for being with us today.
I
Thank
appreciate
you,
it,
Mark.
gentlemen. Thanks, Andy and Sean. Thank you, guys.
All right. With that, everybody, that is our show for the week. Again, don't forget to join us next week for the live stream. Next week, we'll be talking as well Tuesday morning about the potential of a recession crisis and whether that creates opportunities or challenges. We know that it creates both, and we'll be talking about it. Thanks so much for being with us. We'll see you guys next week.
Have a good day, everyone.